But to now an important voice, and Bloomberg named him among the world's 50 most influential speakers. But Andy Xi shot the limelight after he called the Asian crisis right when he was at the World Bank, and then the timing of China's slowdown when at Morgan Stanley. He joins in then to talk about his observations on China as well as India. Andy, such a pleasure speaking with you today, and welcome to India. Is world's growth on an uptrend, and what really is the role, according to you, of US, China and Japan in that light?
Well, I think that the US could increase its growth, but it's not a global trend, because the Trump administration probably may introduce a fiscal stimulus bill that would maybe add 1 percentage point to the U.S. growth rate. So that will take the growth rate from 2.5% to 3.5%. But it's really due to a specific policy in the United States, and I don't see that's going to translate into other places. I still see that Japan and Europe are very sluggish. We're talking about 1%, around 1%. Emerging economies are pretty sluggish, mainly because commodity prices, even though there has been a rebound, still very low. I don't see, without the commodity prices coming back, how could most emerging economies grow? And for China, it's still based on investment. If you are already over-invested, if you already have overcapacity, how could you have a high growth based on investment? So I see that next year, the global growth rate is still going to be like 2.5%. It's not going to be it's not going to be like what we saw before the crisis, like 3.5 to 4%. It's still very sluggish global economy.
Okay, so sluggish growth is what you are expecting, and the reason we're getting you here is also because you're renowned for calling the South Asian crisis right when you were at the World Bank. You were way ahead of the curve when it came to the slowdown in China, calling that. You've already said sluggish growth, but what are some of the signs that you're seeing that we need to be aware of, the caution brewing somewhere in the world that the emerging markets need to factor in?
The anti-globalization backlash in the West is, I think, this is just beginning. That's something I've been talking about for a long time. The issue is that the high-wage workers in the West, what they do can be done much cheaper in the emerging economies like India, China, or other countries. That situation will not change. I think that the labor market pressure in the West will continue. So protectionism in the West will keep rising. That means that emerging economies, the old development model based on trade between the high wealth level West and high productivity but a low wealth level emerging economies, that model is not going to work. So for emerging economies, they must step back and think about some other model. What I see is that the only way out is for emerging economies to have their own free trade agreement, because the emerging economies have similar wage level, and so there would not be the same pressure like what we have seen in the trade between the East and the West. So I see that but this is a long way off. Emerging economies are used to think about protecting some industries and opening some markets. So free trade for emerging economies has always been very selective. Now the emerging economies need to embrace free trade wholeheartedly, so that the emerging economies become a whole block, and a high growth, high productivity block that may bring back the global growth. That's the only way to bring back the global growth. Otherwise, we'll be stuck in slow growth for a long time to come.
Andy, just, so much talk in India around demonetization, the slowdown effects, the road to recovery. Say another 1 to 2 years from here, what according to you would be the economic outlook? And do you think the markets and the economy per se would be able to transition from this remonetization phase?
I think India's short-term focus should be on stability, not growth. Okay, I think the U.S. is tightening monetary policy. The Trump administration is likely to have an infrastructure stimulus. So liquidity is going back to the United States. In this kind of environment, if India focuses on kind of reviving growth through fiscal monetary stimulus, it's very dangerous. It could lead to currency instability, and I think that's could have very bad consequences. So the focus should be on stability, in particular currency stability. Therefore, emerging economies, when the U.S. is tightening, currency stability is very important. Then you try to use economic reforms, structural reforms to attract capital, attract productive capital, and that is through that to revive the growth, not through kind of usual fiscal and monetary stimulus to revive growth. So this would be my advice to the government. Don't look for shortcuts. Really need to focus on long-term strategy and try to attract the long-term capital to revive growth, not short-term speculative capital to goose up a GDP growth rate for a quarter or two.
Right, thanks Andy. We're going to leave it at that. Always a pleasure talking to you. That's Andy with his views on the emerging markets and what we must be aware of, and of course he got the previous crisis absolutely right, so a heavyweight when it comes to those kind of predictions. Also, we saw the European markets open, and Aisha, they opened quite, no fireworks. In fact, it's been in the negative territory ahead of Theresa May's speech on the full Brexit from the European Union. We'll pick up on that, as well as Dharmendra Pradhan's views on whether there's a case for excise duty cuts on petrol and diesel in light of crude prices rising. You're watching Markets at Lunch, and we'll be back in less than 2 minutes.